Hey traders, this is Ron Haydat Market Tamer. Happy Sunday. Hope you guys are having a fantastic weekend. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security, trading stocks and options involved in specific financial issues should always be addressed with your financial advisor. We're going to kick off here with the Dow. But before we do, let me just pop open this panel. It's around 8:15 p.m. Eastern. We can see the ES futures, which are the S&P. They're up 6 points. The Dow's up 64 and the NASDAQ is up 34.5 points right now. So things are sort of stable right now, not a whole lot going on, which is why I specifically wanted to wait till the market opened this evening to see how we were going to trade. If we now jump into the Dow on a daily basis, this is a 1-year chart using Thinkorswim's profit charts. The major lows is what we would go to. That's 240. That's like $6 below we are now. Then there's this support area, 235, dipping into the 230 area as downside targets. If I zoom in here, you can see how the 5-day EMA for the past 3, 6, 7, 8 days, we just can't get above it. And Friday's action, while it was looking pretty bleak at one point, there was short covering into the weekend. The bears won the week once more, so why take that risk of a Monday gap up? The bears are going to have the edge across all the majors this week as well. We're getting through some earnings season. There's news after the bell that IBM is buying Red Hat. So we might see IBM trade lower and Red Hat will go up. But the one thing that's still out there as earnings season begins to get further and further along is the elections. And that's going to be another week away. We could see more downside, we could see some stabilization, then maybe a rally once we see which side's going to win, if it's going to be status quo with what we got or if there's going to be a change. Markets hate change. Markets hate uncertainty. We just want to keep an eye on that. I'm not being political, saying one's better than the other for policy, but what I'm saying is how the market's reaction would be to it. Right? The market does not like to not know what's going on, so there's profit taking occurring right now. If we take a look now at the SPY, which I have a bullish position in, it's still trending lower. The target is down here, and that is this shaded area that I've had in here for quite some time. Ballpark 255, 260 on the daily chart. If I zoom in, you can see how we've come down. We're bouncing, and down we go again. Now that's a big high wave doji on Friday, but it's still below the 5-day EMA in blue. The trend here is still bearish. If we go to the Qs, they did not break below Wednesday's low on a closing basis, but they did break it intraday. The Qs are below their 5-day EMA. Where is the target? Well, all you would do is go back to major consolidation or swing lows. There's a little bit of a swing low here at 160, then the major is 155. There could be one more plunge this week, which would time perfectly into the election if that's what the market is truly worried about, which is what it seems to be right now. Here's the IWM. This is the Russell 2000 ETF. I mean, this thing has just fallen quite a bit in a short period of time. 170 down as low as 145. Massive high wave doji. You can see that. The volume wasn't massive, though. It's testing support at 145. It's been leading the charge down. It's already at support. So if it breaks support at 145, if we go back 2 years, now you can see where's 2-year support. You'd have to come all the way back down into the low 130s. That's huge. So this one's really looking ugly right now. The other indexes are looking far better. If we go to MDY, in terms of being ready to break massive support, here are your mid caps. There's a February low. You can argue we are still holding that. Its next support reflects what the small caps do in terms of a move down. Arguably another 7-8% lower down to the 300 area. So if I switch back to the SPY, the S&P 500 on a 2-year chart, you can see this is the support zone. If the S&P can't hold the 255 area, there's an unfilled gap down at 240. That's pretty significant. I'm not saying it's going to get there yet because no one really knows where the market's going to end up, but I want to be clear in terms of direction. Until we can get back above the blue line, the short term, the 5-day period, is bearish. Until we get above the red line, the 20 period is bearish. Until we get above the orange, which is the 50-day institutional, it's bearish. You can see what's going on right now. This is not looking good for the bulls walking into this week. Yes, there was a rally on Friday. I think that was the bears just covering their butts. Now we just got to see what happens between now and the election and see how that plays out. So bearish strategies would still be preferred in my opinion, not looking for bullish strategies just yet. unless the stocks are doing well by trading above their moving averages. So the bears are in charge. We take a look at the VIX, which if you are a bull, this would be concerning. The VIX is still not spiked in a big way, and I think that is a worry. We've had a little jump here back in October. We've barely even exceeded those highs, and the market is coming down pretty hard. If we get a lot of people freaking out, this thing might finally just pop way up here and give us a potential reversal signal, meaning a spike up in the VIX, spike down in the markets, and then you have that capitulation situation where we would finally get a bottom. If I had to guess, I'd say the best time-wise, again, it's just a guess on my end, probably between now and Thursday, probably between now and Wednesday for a crash, if we're going to make that next push lower. Because if the bears do push it lower, they're probably going to want a short cover going into the weekend. And then you have Monday, wishy-washy day, and then Tuesday's the election, and we start to know what's going to happen with policy, whether there's going to be a change or if it's going to be still as what's in charge right now. We'll quickly review gold and bonds, and then we'll end it there. Gold has popped up here in October, but remember, this is not the time it typically shines. And despite how the equity market is selling off, gold's not doing a whole lot. It's gone from 112 to 116. Ooh, a big $4 or 40 bucks an ounce. Again, it's not its time to shine until we get to January, but also not fight the quality in terms of, they want to buy the yellow shiny stuff because they're worried about stocks. That's not a lot of conviction when you're only up 40 bucks an ounce when the market's collapsing. You look at silver, it's even worse. You've gone from about 13 and a quarter to 13.80. Then you go look at bonds. I mean, these things are bouncing as if, can we even call that a bounce? That's pretty pathetic. We moved up a little bit here, but they're selling off the highs. So what this tells me is they're not running the gold, they're not running the silver, they're not running the bonds, they're not running the emerging markets. If we look at EEM, this thing is still in really bad shape. They're just taking a break from stocks. And once we get through the election, I think at that point, unless earnings keep getting worse or there's some kind of massive policy change, the stock market's the only place left in town right now. So still bullish on that, even despite the current correction. So we're not going to do individual stocks tonight because there's probably going to be more fireworks starting this week. We'll go back into the Google, the Apple, watch for Facebook and Amazon and all these others, starting with tomorrow night's video. Okay, so I hope you found this helpful. If there are some individual stocks you'd like a educational review on from a technical perspective, I'm happy to do that. You can shoot us an email at cs@markettamer.com. CS stands for customer support. You can post to the YouTube channel, and we can review those this coming week. So have yourselves a fantastic week ahead. Wish you guys all the very best. Bye-bye.